And we're live. Good morning, good afternoon, good evening, wherever you are. If you're watching us on YouTube, make sure to like, comment any feedback, subscribe, and turn on bell notifications. That way, you are up to date on all our content services. We have a morning stream, breakfast news. We have a mid afternoon stream, which is lunchtime technicals on equities and in the crypto markets. We have a post equities market closing stream called Market Talk. And the last show is mine's Crypto World Radio, presented to you by King Wabi. And today we have our special guest, Nicholas, who has experience on the institutional trading side of crypto. And, he's had interactions with very big players, among the crypto space, Galaxy Digital, Andreessen Horowitz, people that, function off of the derivative side of crypto. He has many years of experience in this market, and he's a very good friend of the show. It's good to have you here, brother. And for those of you that are listening here on my Twitter profile, I just want to let you guys know that today is one of the very rare instances that I am hosting a space on my profile, given the extreme bandwidth that occurred earlier with Carter hosting his space on Twitter Spaces, and we want to give our producers a break. So today will be one of the few times that I'm hosting this space on my end, but be sure to follow the Because Bitcoin profile, and you can go on their website where you can see various news articles within the crypto space. Always keeping up to date with events within the industry. And one announcement that I do want to give you guys is that I will start writing out articles on the site. So if you want a more in-depth perspective when it comes to stream of consciousness, you can check that out. I will be dropping my first article before year end, and it'll be more, of course, what you guys know me for, which is more of a fundamental analysis sort of aspect. But I will be contributing to the Because Bitcoin website when it pertains to things like daily articles, contributing to newsletters, and in time I will also start producing some more formatted YouTube content as far as giving you guys some in-depth analysis over some projects that our Inner Circle community enjoys. And speaking about our Inner Circle community, be sure to join our Discord. I'll put up the link up on the Nest, and it should be down below in the description if you're viewing us from YouTube. And for those of you that haven't joined the Discord yet, honestly, I don't know what you're waiting for. We always have a community group up at that time in the voice chat, always interactive. And we talk all things equities and crypto, or, just locker room talk. We like to treat our community members like brothers and sisters. Everybody's welcome. We're inclusive. And yeah, good to be here with you guys. We're also joined by our friend Payne. What's up, Payne? How are you, my man? And
Doing great, man.
it's good to have you here, brother.
Beautiful evening.
Exactly, dude. That's what I'm talking about.
It's a
We're about
beautiful
10
evening to
days.
raise some rates.
Yeah, speaking of rates, Pal's gonna go 50-50 on us. So speaking of 50-50, I want to make it fair. I think I'm talking too much. You guys know I like to go on my rambles, and time escapes me. I see our boy Emergent is up here. What's up, Emergent? And some of our BB Chads. I see James. What's up? Tucker. What's up? Kimchi, my boy Kimchi, always a big supporter of the brand. Good to see you up here, brother. So without further ado, let's get rolling, man. Nick, how are you doing, my man?
Good, good. Another FOMC day, last one of the year, and yeah, getting ready for the holidays.
That's what's up, bro. We got a 50 basis point hike. Pal's gonna keep it 50-50 with us instead of going goblin mode and giving us another 75 for the culture. So I guess that's nice, right?
Yeah, it's actually interesting from my perspective. Implied vols continue to go into the gutter, so now we're seeing almost absolute lows and Bitcoin implied vol. So not a lot of action happening in the options markets.
So tell us about yourself, Nicholas, and then we can kind of get in depth about how you view the market relative to us retail plebs. Go ahead, brother. The stage is all yours. It's great to have you here, man.
Appreciate it, Wabi. I trade crypto derivatives. I work for one of the institutions in the space, mostly listed derivatives. We occasionally do OTC with some of the counterparties Wabi mentioned before. Guess my history, I started at a equity volatility hedge fund. We were specifically long vol, and we closed up shop right after COVID 2020, had a fantastic year, but we faced redemptions as people didn't see a vol event coming into the future. So we would have just been a net bleed on the portfolio. So from there, I dove into real estate a little bit. It's more on the private equity side, doing a bunch of land deals, creating build for rent communities. And then I landed in crypto after. I would say what's really taken me here is I have really good technical skills, whether that's Excel, Python, figuring out problems that people don't want to take time to figure out. And then just being, I don't know, very financially savvy, if that's a good term.
So talk to us about how you see the market relative to retail, because like when it pertains to myself, I'm looking at things like moving averages, and as long as say like what dictates being a quote unquote bull market would be a 20-week SMA, right? And as long as we remain under that, I think of it as a trading sort of environment. So from you and like your data points, what are things that you've looked at that are implications of, all right, we have to flip completely net long and all dips are safer buying? Because in a bull trend, if you're able to buy the dip more than 2 times and you know revert higher to that level and go on to continuation in the bull market. Example of that would be like, say we go to 25K and we start putting in weekly closes above it, and say we dip to like 26 and then we go to 30. That's implication of, all right, the trend is obviously changing. What are some things that you look at from like a derivative trader perspective that tells you far ahead of time that, all right, it's time for us to flip long? I remember back in June, when we retested, I think it was like 18.5 or something like that. You were giving the implications that you had seen some price action that we might have a squeeze to the upside, but shortly after, given what you saw on the institutional side, there was a possibility for us to make new lows, and which we did. Sorry if that sounds like a bit long-winded, brother.
No, and yeah, I think it's a really tough question, because what you're saying is that how do you time beta effectively, right? And there's many techniques, whether that's trend following, like you mentioned. There could be just a pure signal. So one of the things we were looking at was how extreme skews were relative to the market, and kind of some cross expiration arbitrage. You could basically do through like calendar spreads, 1x2s. A lot of the option structures we were pricing out, likely there wouldn't be enough volume to fill them, but it was essentially arbitrage. And we know that can't kind of continue in the market. There's too many sophisticated players at this time for that to be allowed. And essentially how that would continue would be more aggressive downside action. I guess answering your question a little more, looking at implied volatilities, looking at skews, that's a really, really good signal, especially if you look at, a long-term, let's just say a long-term rank of skews, and you see that skews are now in the 100th percentile, essentially meaning that puts have more implied vol than calls. But if we look at that historically, this is the most that puts have been priced relative to calls. Now, that's not necessarily going to be the bottom, and that phenomena can last for several days, but it's very unlikely that that phenomena stays consistent. So, I would definitely say there's a mix. Now, it's interesting that you talk about timing the market and timing beta, because while yes, this is one of the things we want to do by putting on things like leverage or buying calls, for example. I don't know if that's necessarily our specialty. What we're rather trying to do is look for more arbitrages or places where we have a high likelihood of profit and are very comfortable hedging. So I gave an example, I think, on the last stream. There was a 1x2 trade. I buy one call and I sell two calls. I think I referenced the 23 by 27,000 in Bitcoin for the March expiration. I was getting that structure for a credit. So what does that mean? That because I own one call that's going to be in the money faster than these other two calls, my technical break even, just based on that structure, if it costs nothing, would be about 31,000. Now that I'm receiving a credit for this, I'm actually getting paid to have an exposure that says, hey, Bitcoin is not going to go below 31,000. Also in this structure, I have a kind of a gamma curve that I need to hedge over time. And on the upside, what makes me really comfortable is kind of the overhead supply. I don't think there's going to be very, very large rips up. And if there is, I'm likely going to have some opportunity to hedge. On the upside, especially in a market like this, hedging the upside is not difficult. What's difficult is the downside. There's a lot of jump risk, right? We're not going to see the price go from 15,000 to 14,999 to 4,998. What we're likely going to see is 15,000, 14,800, 14,500, all happen within seconds. And my path dependency in that scenario is worse. Again, this is probably a rant, but that's kind of how I would be looking at certain trades or trying to find some kind of alpha in the market.
Brother, don't feel shy, man. You're spitting straight alpha, and being a complete noob when it comes to the options market and all that stuff. It's really interesting to hear from people that have experience in this. And for those of you who don't know, like, I do not trade equities whatsoever, not spot, not any sort of derivatives. So really, the only knowledge that I have when someone talks about options outside of my interaction with Nicholas at the moment is the host of Market Talk, Carter, and it's quite a different environment, to be honest. But speaking of equities and crypto, that being the subject, is there any sort of difference in between the options market and crypto and equities?
I would say the kind of biggest challenge is a lot of the options that we trade are denominated in kind. So a BTC option is priced in BTC, even though the strike is in USD. So hopefully that wasn't too much of a tongue twister. But essentially, how I think about it is almost puts have double the power and calls have about half the power. So yeah, it's that's definitely a different phenomena. I'm going to kind of reference what I said before, but options are really about path dependency. It's about, how do I get there? Do I get there quick? Do I get there slow? Do I trend there? Do I get there all in one day and move sideways? It's a very path dependent game. So that versus equities, especially something in like the S&P 500. The S&P 500 has um, a lot of catalysts that can possibly push the market, right? This could be a Apple, Google earnings event just because of their sheer weighting of the market and their correlations to other tech stocks. It could be an FOMC event. So there's a lot of events that can really move equity markets. Versus, I think in crypto, what we're starting to see is during the bull market, we've definitely had the retail craze, and that was likely harder to identify what the main catalyst was going to be. But I would actually say in this bear market, it's been really easy to kind of see what the catalysts are going to be. I'm going to make one quick reference right here, and why I'm saying, hey, there's a bunch of jump risk below 15,000. So Marathon Holdings, a large public Bitcoin miner, released a quarterly report for the third quarter. In that report, they mentioned that on November 9th, they received a capital call due to them borrowing dollars from a large lender we know as Silvergate. And in that note, they mentioned a capital call of about 2,000 Bitcoin occurring on November 9th, right? So I know on November 9th, whatever that price was, I now have a price. I know that right now, the loan amount that they have and the collateral they have with that loan, it's 10,000 Bitcoin. I know they have 12,000 Bitcoin on their balance sheet. They only have 2,000 Bitcoin to put up as collateral. My expectation is if we go below that Nov 9th price, that capital call or a capital call of similarity would likely happen. And what we would likely see is a margin call on a very large Bitcoin holding. And if you go and look at Silvergate's investor presentations, one of the things that they comment is or one of their risk management measures is how quickly they're able to liquidate Bitcoin. I don't think there's any appetite for any OTC transaction, given where credit markets are. There's likely a better place to play if someone's trying to allocate that much money, especially at the current time. And why wouldn't you let this Bitcoin come onto market if you were going to buy it anyway? Let it come onto market. Let it crash the price. Let it hit those stop losses, and then pick up all the garbage that's left after. Yeah.
So if you guys look at things that when it comes to the options market, do you guys ever look at underlying fundamentals? Back in early November during the whole FTX and SBF situation, did you guys start to flip at least short term to the downside to hedge against any long position? Do you guys factor that in during your strategy? Fundamental events, right? Given that FTX was a black swan triggered by a tweet, do you guys ever look at that, or is it strictly what we see on the books on the computer?
So no, there's definitely a factor of that. We are definitely more quantitatively driven, but we have these inputs and these errors that we could essentially put in our models to say, hey, we should expect a little more volatility given what's going on in the market. And frankly, there's no easy quantitative way to, go track CZ's tweets and know exactly what's going to happen after, or go look at what happened with Luna and say, oh, this is directly correlated to Bitcoin, right? There's some intuition needed in that. I would say during May, June, what really happened is we saw how much of the system was kind of playing the same game. So just as a reference, I think through 2021, what we saw and why so many people got into altcoins is the capital raising space became hyper competitive in terms of returns. We actually weren't that attractive due to our more normal returns relative to other cryptos. And what we ended up, we had loans with BlockFi, FTX, Genesis, and they capital called all of our loans and closed down all of our loans, even though they were over collateralized. I mentioned on FTX we had, almost double the amount of the loan on FTX, and we had a 15-minute warning in the middle of the night that they're going to close our loan. Even before we responded, they closed our loan. So that was a big shocker, and that definitely made us lose trust in the system. When we started thinking about it deeper, what we realized is a lot of participants were similar to us, and a lot of these loans were open term. And let's say you're carrying a loan for a year on an open term, you've been paying interest on it. BlockFi is not asking any questions because things are running smoothly. What ends up happening is you act as if this capital is going to be there inherently forever, right? Because it's an open term loan, your liability has infinite duration. So I think what happened is there was a kind of a mismatch between the liability duration and the asset duration that a lot of these funds were in. Also, during that time, we began to analyze a lot of the VC space. We have analyzed a lot of the Bitcoin mining space, and that really took us by surprise just to see how many people were kind of commingled. Like at that point, we saw Genesis and Circle Gemini and Circle using Genesis for their yield products. At that time, we were interacting with Genesis very, very heavily on in the options market. And one of the things we noticed there was they would quote just ridiculous bid-ask spreads. Like it was so tight, it was better than on screen. And they would take everything. They would take every little bit of flow that you would list. And what happened in the middle of May is a huge illiquidity event, and we couldn't get out of some option strikes. It was just completely liquid. There was no bid, no ask. There was times where we sold a bunch of call options that were just completely mispriced. I think someone's algorithm screwed up there, but they were trading 10 to 15% above fair value at that time. So we kind of saw how all in people were, and how many people were in bed with each other, and with what happened to us, we began to get really worried about kind of the rest of the market and other participants.
Nick, I remember you had said in a prior space of Minds that the exposure that all these funds had in Luna and in UST via Anchor. Would you say that, a lot of these big players put a lot of their treasuries to backstop their margin calls within things like Anchor or things that are exposed to Anchor? I remember that you had said that if you were a fund, you simply had to be hedged, given that Anchor did provide a 19% yield. I wanted to inquire about that so our audience can know, given that we are in a formatted piece.
Yeah, I think in general, a lot of treasuries went in anchor, right? It was the best game in town. I mean, by far. The next, stable coin yield was like 7% or 9%. Nothing had as much volume, right? And I also want to make a point. Why did we trust this thing so much? Why did everyone trust this thing so much? They went by volume, right? When we talked to institutional players, they were like, "Hey, Do Kwon is the next Steve Jobs. His reputation was insane." And you kind of felt silly as a crypto participant when I'm collecting my management fees or performance fees, and that's sticking in dollars in our treasury instead of, hey, let's go have this thing yield 20%. I think that also attracted a lot of new entrants when bonds at that time were yielding 2-3%, if that. So when you saw this pretty 20% yield on UST, and every time the treasury got close to diminishing, it always got refilled. I think there was definitely a trap there that a lot of people fell into.
So, Nick, given that it's been a few quarters since then, that all of these funds gave out yield products that were exposed to UST and other DeFi derivatives products, things like BlockFi and Celsius, et cetera, et cetera. Now that it's been a few quarters off of that, and the unwind for the most part, I believe is at the very least 75% done, and at the very highest 95% done. Um, is there anything at the current moment, from your viewpoint as an institutional player, that can perhaps extend the domino effect and have some sort of fallout? I know Genesis is undergoing some reconstructing when it pertains to their management, and whatever dollar denomination they have to stop a margin call. Is there anything that the market should be looking at outside of that mining company that you had mentioned in an earlier space, I believe. I think
Yeah,
I think it's Marathon. Yeah.
yeah. So I think the biggest risk right now in terms of Bitcoin is the miners. They have large holdings of BTC on their balance sheet and have to pay out USD every single day. A lot of these miners are not operating profitably right now. I think Hut 8 released their fixed cost is something like 18,300 on Bitcoin. Yeah, you know what we hit today? 18,300 on Bitcoin, right? Like that's a place where they're mining for break even, and that's just to pay the machine or run the electricity and pay for the machines. What about paying the people in there? So I'm very cautious right now in terms of do we see this supply really come on from the Bitcoin side? I think what it takes is Bitcoin either staying down here, basically below this 18.3 level for several months. Then you'll likely see someone shut up shop. And the other scenario is if Bitcoin goes and Marathon gets liquidated, I would likely expect a cascade of liquidations, a mix of hedge funds as well as miners. On the ETH side, I think it's a little different. I think ETH is more of like hedge fund exposure. You have to be more worried about fund redemptions. I also think on ETH you're a little different because of the altcoin wipeout. I don't know how many people are especially on an institutional front willing to get into altcoins right now. But we have heard some interest of people getting into ETH to replicate some kind of beta plus exposure to Bitcoin. But I would say you're right. There if you look at like the miner balance sheets, I think there's like 3 public miners that have Bitcoin holdings.
Yeah, Vestige. If you're not able to hear Nick, just drop out of the space and come back, and I'll invite you up.
I can hear you now.
Yeah, no, Nick was talking, and I'm not sure if you were able to hear him.
I can hear Nick fine.
Okay.
So I think it's
I think it's just
problem
me.
here on Prestige.
Yeah.
So overall, yeah, I think a majority is done, but we can easily pick out, like the miners right now, right? That should be, if you are a Bitcoin player, if you are a long-term Bitcoin bull, that is something you should be paying attention to, and quarterly presentations you should be listening to.
So I had a quick question, Nick. Are people, the institutions that you've been talking to, are they interested in ETH just as a beta play to Bitcoin, or are they interested in it for the yield?
So I don't know if they're interested in necessarily, like, to say the beta to Bitcoin. They're looking at this as kind of a crypto blue chip, and it's much easier to say, hey, ETH, the next bull market's going to be a winner, than trying to pick an altcoin right now, because they know during the next bull market they could basically throw money at any altcoin and it's going to go up.
Nick, I wanted to throw something in your direction, and I want to see if we can derive any alpha from this, because I do think what you're saying has a lot of value, especially when it pertains to the miner side of things. So if we take a look at the peak across all markets back in November, the total market cap for all miners was at around 20 billion, and currently at the moment, from where we're at an over 90% drawdown, just under 2 billion. And when we look at Ethereum, right, I understand that a lot of the BTC maxi community, the Satoshi denominators, they look at everything is going to be transformed in the way we purchase things. It's all going to be derived in sats, right? But there's something to be said when you have the total value locked across DeFi still at over $50 billion, and that has not touched, not even near that 85% drawdown. And when you look at Ethereum at a multi-year basis, Ethereum is slowly starting to capture market share from drawdown to peak, cycle per cycle. And there's something to be said. And I know a lot of people look at ETH BTC moving forward, but there comes a time and point where an asset has proved itself over a long period of time and has gone through these black swan events that it is now a hardened asset, right? BTC proved itself the last cycle as a hard asset, right? And it's now deemed as a commodity. If you look at its market cap, we're 300 billion plus. That, in essence, is a hard asset that's slowly becoming a commodity. There are entire industries around it, mining companies valued at 9 figures plus. And soon, you'll have the same when it pertains to Ethereum. If we look at the Ethereum and the economy that it's created, look at all the companies that have been built because of the smart contract economy. If we look at things like Aave, Aave has a treasury of over $100 million. The total TVL in Aave far exceeds its market cap. I know me and Payne were discussing metrics like this. So, Susie, I wanted to ask you, are these metrics that you guys look at as well? Like, do you guys deep dive into ecosystems when it pertains to Ethereum or any chains? Because I think the main thing that we should look at when it pertains to alts, in my opinion, and this might sound very left curve, we should be looking at things like Maker. How much money is flowing through Maker? The issuer of a major stablecoin called DAI. How many institutions are exposed to DAI, right? How many institutions are still locked up in Aave, right? How much of their treasury is still being locked up as collateral? And if so, like, those borrowed funds, where are they parked? So do you guys look at that as well?
Yeah, I think we generally do. I guess, like, right now, kind of our big narratives are, what's up for Bitcoin ahead, while you potentially have this Genesis GBTC unwind. I think Fir Tree just started some litigation regarding that. So that's something that's on our radar, possible supply event for Bitcoin. I mentioned the miners, possible supply event for Bitcoin, and then something that's likely going to be in the future. It was a scare this August, but the Mt. Gox release, right? It's just something in the future, but more supply on Bitcoin. On ETH, we're kind of having trouble. What supply is left, right? The miners are gone. Whoever's staking can't even withdraw. I think withdrawals are, again, undefined. It was a promise that you can unlock your ETH 1 year after merge. Well, that's been removed from the Ethereum Foundation's website. So it's kind of hard to say, hey, what supply is going to come onto the ETH market. I don't really know anymore, right? Like if you had a chance to start a company and spin up your own shitcoin or your own alt, because I generally think most of them are shitcoins, and you haven't gotten out yet to Ethereum and then to dollars. I mean, you're so late in the game that it's probably not worth it to do anymore. But I definitely think some of those considerations, like TVL, are definitely important. It just depends. Is it actually Ethereum, or is it Shiba Inu that's being staked and is $10 billion of that value? Yeah, I would say we're constantly looking for new measures, but over time it's what are these main driving narratives that we can kind of latch on to and say, hey, this is a big, there's a large amount of supply that's going to be coming onto the market because of X, Y, and Z. There's a large amount of demand that's going to be coming onto the market by X, Y, and Z. And then really looking at how those funds flow into the system and if there's any opportunity to take bits of it.
Do you guys see what's going on again to run it back to the mining companies and the infrastructure when it comes to funds like Genesis? Do you guys believe that this might be the actual real first bear market cycle when it pertains to crypto? This cycle we had mining companies going public. We had people from Wall Street having exposure to DeFi, right? And a lot of them have been priced out. Are you guys in a point in time where you guys look at the depreciation of assets over the last year and think, all right, if BTC is down 80%, right? If public mining companies are down over 90%, when you have certain metrics like that, and you guys look at DeFi and say, all right, there's been no DeFi exodus, right? There hasn't been any on-chain capitulation on Aave or Compound or Maker. There's been no disruption of ETH L2s, like Arbitrum hasn't gone offline, Optimism hasn't gone offline, Matic hasn't gone offline, Cosmos hasn't gone offline. All these newer innovations that have come out into the market over the last 2-3 years, they've been perfectly healthy the entire time, despite what's happened to FTX, despite the 3AC fallout, despite the Celsius and the Voyager fallout. With these metrics laid out in front of you guys, does there come a certain point in time where you guys start allocating and say like longer dated calls, like 2 years out, 18 months out, or even some spot allocation? Um, is that something that you guys look at, given that this market has proved itself to be something more cyclical?
Yeah, I think I've mentioned this before, but I think it's, again, none of this is financial advice, but I generally think it's smart to be starting a 1 year TWAP over the next year, even starting that TWAP now. I generally think too much has been built around this space for it to go down. It's almost like too big to fail. And there has been a lot of good innovations, right? Like, as much as I can joke about NFTs, there's probably real applications in that, right? As much as, we can joke about Bitcoin not having this, Web3 aspect. Well, we do know that there's a certain amount of coins. We just entered a huge bout of inflation, and it hasn't gone away. It's declined in price, but if we actually look during the inflationary period when interest rates were at zero, look at what Bitcoin did. It performed fantastic. So yeah, I think in general for us, we're daily, taking stabs at the market and getting in. But that doesn't mean the coast is clear, right? Like I'm, I know another shoe could drop. That's why I would want to average in price for a longer period of time than just, go all in today. And then if the price is at 15,000 tomorrow, I'm pissed, right? I would buy a little here, buy a little at 16, buy more at 17, buy some at 15, buy some at 15.5, 14.5, wherever it goes. And it could just be to having larger size. That's probably more effective, right? We don't want to have a market impact. We'd rather continue to collect at these what we see as lower prices. So yeah.
And on a more personal note, I think what I'm about to say does have to start being entertained as the months go on. For anyone who doesn't know, the Bitcoin halving is less than 18 months away, and like we've been saying in this space, the evaluation of public miners has gone down over 90%, and a lot of these entities have essentially been priced out of the market. So you have a situation where newer companies that either haven't gone public or haven't gone insolvent, they have a chance to jump in on this opportunity to gain market share for the next halving. And to my knowledge, I think the next halving, there's only going to be 3 BTC mined per block. So essentially, it's going to be the last halving cycle where more than 1 BTC is going to be mined per block. And I think this is potentially the most important date uh, in BTC history. I believe it's like May 9th of 2024. I could be wrong by a few days or even a week. But at that point, we'll have proof that, all right, Bitcoin has undergone a recession. Bitcoin has undergone an inflationary environment, right? Um, and of course, when it pertains to rate hikes, there is a case to be said that this is the most aggressive rate hike cycle since Paul Volcker, rest in peace, right? And if you look back at history, inflationary bear markets are no joke, and it usually comes in waves, right? There was a wave. There were two waves in the late '70s, and then there was a final wave where Volcker literally had to raise rates to like I think it was like almost 20%. So essentially it became anchor protocol, like pre-anchor. People were incentivized to just, get a regular job and put those funds into a savings account. And it was a complete anomaly. And with that being said, 5% might not be much, but in this environment, it certainly is. Even though you're still getting eaten away at inflation, there's still something to be said when it pertains to this asset class. And I know, like, many people are familiar with us, with the way that we speak about outside of BTC, which is crypto and Web3. But um, make no mistake, we are knowledgeable when it pertains to Bitcoin and the value that it has. And there's also something to be said with the amount of money that has been flowing in and out of Bitcoin, right? If we look past at the last 5 years, how much money has been processed through the Bitcoin network relative to 2017, right? Quite a lot by an extreme denomination. Even though we are in a recession, we're in an inflationary bear market, technically a soft recession, right? Two negative quarters of GDP growth, and then our latest print was pretty positive. So technically a soft recession, but I'm not going to talk macro here. I'm sorry for for rambling on, but Nick, is that something that you guys are looking at as well? And perhaps it can add to your thesis of, all right, let's just start a slow TWAP with a perspective of with um, with a perspective of being a year out. And we also have the Litecoin halving, which is in August. And if you look back on history, um, that is indicative of BTC following through as we get closer to the BTC halving. So, uh, go ahead, brother.
Now, Wabi, I would definitely say that is much more likely correlation than causation between the Litecoin happening. And I did want to reference, I just gave you guys this public document. You go on Hut 8, they'll tell you they're mining for about 18,000 a Bitcoin, right? So as those rewards get cut in half, and let's just say everything else remains consistent, no new miners enter the market, difficulty is the same, etc. That would essentially put their break-even mining price at $36,000. So if it's not close to there, Hut 8 would shut down. I'm sure a bunch of miners would shut down. And I believe that BTC halvings between March and April of 2024 is the current estimate. So, that's another price marker we're kind of looking at, given you guys can go look at all of the publicly traded Bitcoin miners. They tend to be more than happy to give you the price. And, especially some of the larger ones, those are things to pay attention to. One of the things we've been discussing, and we don't know if it's fair or not yet, but basically the fair value of Bitcoin being the cost that it is to produce a Bitcoin would be like the absolute market neutral value. This is kind of being tested right now because we know people are using like natural gas flares and can literally mine Bitcoin for money, right? They'll just push the rest of that electricity back into the grid and get paid for it. So it's definitely interesting, and I think we saw ExxonMobil be a head sponsor of like Bitcoin Magazine, and is going to be pretty involved in the Bitcoin conference next year. So we'll see if any of those dynamics change and if mining gets cheaper. But if it doesn't, we would have to be above that price for, in my opinion, for the Bitcoin network to keep functioning well.
And speaking of Exxon, which is an energy company, in the case that we do experience some drawdown as the equity markets trend lower, is there a case to be made where someone like Exxon or maybe BP or any of these other large energy companies, is there a case to be made that there could be some sort of lovemaking or some sort of bailout on their end?
I think what would concern me is that, again, let's say you could mine Bitcoin through natural gas flares, right? Then the price of mining gets really, really close to zero, and there would essentially be no reason to for that miner to hold it, right? They would just liquidate automatically on the market. So I would actually be worried about that perspective a little bit, but it's something to pay attention to. It's something to definitely pay attention to, and as these big players do get involved, watch their actions, look at what they're investing in. A lot of the times, what you can see is someone is investing in project X, Y, and Z, and you could either front run them. You could do a trade that's tied to project X, Y, and Z. That way, when project X, Y, Z gets money into it, this thing's likely going to get money into it. And again, it's hard to go and say, oh, this is going to be a long right now, or this is going to be at this price by 2024. These are just estimates and kind of it gives us a benchmark for time. Just kind of talking about the recession, that's also something that would worry me, given I don't think a lot of people would allocate their US dollars to crypto in a recession. We likely need good times. So that is something that's on our watch and we're worried about. Funny enough, we don't really look at like the 10-year, the 2-year. Don't really pay attention to SPY. We pay more attention to Nasdaq, and then the euro dollar futures curve is our kind of our big signal, especially on these FOMC days.
Yeah, I also look at the Nasdaq a lot more. And when it comes to price points, I think that when it comes to crypto, if we see the Nasdaq putting in weekly closes below 8,500, I think something could honestly break in these markets. To be honest, I think if you look at that point of control back in May of 2020, that's essentially when we had the halvening and DeFi summer kicked off, and a lot of these evaluations, when it pertains to the mining companies, were just straight up only. I think Marathon, I think Marathon put in like thousands and thousands of percentage gains from that point up until November of last year, right? And there's something to be said when you talk about these fundamental events. And I know we have a couple of speakers here, and we'll do a round table pretty soon. But to finish off with this, brother, what was it that had attracted you to this market? Was it something fundamental, or was it more like that high adrenaline rush when the volatility kicks in that crypto and Web3 is known for?
I mean, generally, what I like is it's extremely new. So there's so much possibility. It's like a kid on the playground for the first time, and I can spin this wheel. It's also a great industry to fuck around and find out, right? So it's really exciting to be in a new space and kind of exploring and discovering and being on the forefront of things. My previous industry, it's really been something that's laid out, right? Like we all know liability driven investing in pension funds. We all know how to run Garch models. In real estate, we need to know how to do waterfalls, preferred shares. And it's really basic. And now, you go to this market and you have, so many new venues. You have so much risk in terms of counterparty. What's around today that's not going to be around tomorrow. I think there's a lot of cool thinking that has to be done, and just being on the forefront is, I don't know, it feels awesome. It feels like you're one of the first people sailing out on to sea to go find the new land.
Thank you, man. Thank you. That was a very good response, dude. I love talking fundamentals and the growth aspect when it comes to like a long-term vision for crypto and Web3 and BTC. I absolutely love the space, man. And I know we have a couple speakers up here, and Nicholas, you've had your hand raised, so we'll kind of open it up to the audience now. For all our listeners, if you want to come up and speak, feel free. Don't be shy. Um, yeah, and I have the link to our Discord up on the Nest. Feel free to join that. You can connect with us and have some fun. I'm sort of a night owl, so you can always find me in the voice chat and interacting with our members. And there's about 840 of us, so always someone to talk to. Nicholas, go ahead, brother. How are you doing, my man?
Hi, Roy. I'm doing well. I have a question for Nicolas. Nice name, by the way. Regarding Binance from the current view on Binance from the institutional side, because I have a friend of mine which is a hedge fund crypto manager, and he got a message from another guy with some concerns about Binance. So I would like to hear your opinion in that topic.
Yeah, so I think in general, right now, every institution is you would rather be safe than sorry. I think a lot of us during this cycle, whether that's Luna Anchor, Genesis, FTX, have really tested, Celsius too, have tested kind of our wherewithal and our trust as a basic premise, even for hey, do I know what you're saying is actually real? In terms of Binance right now, yeah, I think it's likely smart to have your assets off exchange. But from what I've seen, and I went to like the Paxos website, looked at the BUSD collateral. I'm not necessarily that concerned, but again, it's a you should be safe than rather be safe than sorry. But I do think Binance is going to make it out of this.
Saknu, go ahead, brother.
GM, I just want to side with my boy Vestige and just say a good fuck you to Justin Trudeau. He's a cuck. But yeah, I agree with the last speaker as well. That you need to get your assets off fucking custody shit, because there's solutions like Gnosis Safe and squads on Solana to do multi-sig solutions where you can still interact with your dApps and still have your assets be safe, because you can't trust shit right now. But betting against Binance is like betting against Tether to go down. It'd be really, really ugly if it happened.
Yeah, I would also say
Huge cuck.
there's a large amount of, I guess there isn't a large amount. There's a couple of main custodians that interact with some of these exchanges. And you can hold your assets with a custodian. It could be recognized by the exchange, and then those assets would settle on a day-to-day basis based on your P&Ls on the exchange. So I think that's also a good opportunity. But again, do a lot of vetting on your custodian. Don't go, with the guy that just popped up shop, a week ago. Go with someone who's been in the space for a long time.
Yeah, CZ rich as fuck. It's just I would always be looking at how much he's loaning against BNB coin, because that's essentially what did Salmon. So if he's loaning against BNB too much, that's where you start seeing red flags.
I think what's a little bit different though, and we've had conversations. We actually had conversations with almost every exchange about doing some type of yield product for their customers. Binance was the only exchange that didn't interact with us based on the offer we sent out. So he's actually been kind of shy to the institutional space in terms of lending.
Well, lending is what's wrecked many in the last 3 years. So I wouldn't be surprised if he only did that in very particular situations, I'm sure.
Yeah, and I honestly, I think the probably biggest solution for lenders right now is stop doing open term loans. If no one knows when the loan's going to end and you can just randomly call it, you're almost bound to have a asset mismatch with whoever borrowed the money. So if you had a fixed term loan, well, let's just say it's a 6-month fixed term, I can't do any trades that have a duration of 7 months.
That's true, but at the end of the day, it depends on what you're loaning against. If it's stable coins, then you're absolutely right. But if it's like Sol or ETH or something, you might have a bad time, especially in this
Yeah, and one of the things I would also mention, if you guys are in any alts And it doesn't matter if they're even small ones. Like we were just looking around today, and there's a couple of these alts that have, you know, a couple hundred million, maybe a billion market cap that trade like $10,000 a day. That market cap's not real. You know, I don't think BNB's market cap is truly real either, but you know, at least it has some real volume going towards it. Some, you know, I don't want to name any names, but if you guys went and looked around, look at market cap versus volume, there's a lot of names that are just air. So yeah, if there was any lending that was done on some of those coins, you're bound to find a sucker at that table.
What's going on, Bashar? It's good to see you up here, bro. How are you doing, my man?
Hey, what's going on, King?
Good to see you, man. Is there anything that you want to say or ask? What's up, bro? It's been a minute, man.
Yeah, it's been a minute. No, not really. I'm just tuning in for today. Yeah, just
That's what's
sitting back.
That's what's up. Payne, I know you haven't had much to say given the rambling between me and Nick. Is there anything that you want to ask him or add?
No, I kind of missed the last 15 minutes. I was having some connection issues. I was driving around, but you should name some names, Nick, with some of these alts.
Unfortunately, I can't. I can't. I have some interaction with some of these guys.
Fair
Hey,
enough.
man, don't pull that shit. Come on now.
It's
Don't be
not,
stingy.
guys. It's not. Don't worry, guys.
He doesn't want to fracture.
Hey,
any
guys,
relationships.
I have a secret, but I can't tell any yet, sorry.
Oh, I can tell you guys how to find it. You know, you just
No, you just
go
on
look at.
CoinGecko.
Yeah,
Guys, it's not AVAX. Okay,
No, I'm just kidding. It's pretty easy to go find those things.
Yeah, we still believe that AVAX is a revolutionary technology that will forever change the way we interact on a day-to-day basis. Okay, when it pertains to how we purchase Snickers bars across various villages. Halfway across the world and in Europe and Zimbabwe. So
We're
I
we're
still,
gonna save the environment too now, Bobby.
yeah, that's right. On Matic, on what was it, Payne? Can you
It's
give us that pitch?
Matic and
Change the world by
AVAX.
buying my Starbucks with Matic.
No, dude,
And there's nothing wrong with Solana. No problems with Solana. It's the most functional, best thing ever. It's so much utility.
I don't know if that was directed at me, but it was a good joke.
Nick. So you know, it's been about an hour. We've had some great talks about, you know, the options market and how you look at things from an institutional lens, and you know, we talked some fundamentals, and I know you have a dinner to get to, but before we close out, is there anything particular that you're looking at for the next narrative in the next cycle from a personal perspective? Like what are you bullish on? And I know that a big topic in our spaces has been greed and innovation, but you in particular, like, are you a Cosmos guy? Are you an Ethereum guy? And if so, like, what are some of the things that are being built on that that you're particularly bullish on?
Well, I'll give you one that's a little different. I like crude oil right now. I think oil and oil companies are interesting. I think for
commodities.
yeah, I think from the crypto side, it's pretty tough. I mean, the three-headed monster, you know, Solana, Luna, and AVAX have basically shown they're built on nothing. Anything else in the top 10, you know, Ripple, Cardano, I don't even know, you know, if they've created anything. I don't think they have. Really, it's just the ETH and BTC ecosystems, and you know, I'm I'm a fan of T-WAPing, over time at these points. And I do have a long-term bullish thesis, but again, all of this comes with caution. We're in just a really crazy time right now where one news event can come out and crypto could be cut 50% from here, given some of the supply that can potentially come on. So
Well,
just remain ultra cautious.
well, I'm bullish on ADA. I honestly believe Charles Hoskinson is going to overthrow the market share from the PlayStation. I'm really bullish on ADA, NFTs, and GameFi. So, let's go.
Well, I
Like
mean, I joined a Cardano space the other day, and the one thing that made
yeah.
me bearish was he kept talking about the goddamn research papers, bro. He kept he
Voltaire,
brought it
dude.
up.
It's all about Voltaire, dude.
He brought it up at least more like 12 times, dude. I'm not even exaggerating.
Bro,
Like,
dude, but
because
tell me,
he was kind of pissed, bro. He was coming at all these. He was like, look, all these people were saying Cardano's a scam. All these people, all these. He was talking about how at Masari Mainnet that like they had a keynote panel with him, I guess, and like they basically just clowned him. And then he kind of just went on to say like, look, man. We've wrote over 150 research papers, man, and I'm like, dude, you can't let that you can't die on the research paper hill, man. There's got to be
dude,
more.
dude, but tell me, dude, from going on those spaces, right? Tell me it doesn't make you bullish on Cardano for the next cycle. Every single project that has rugged and given their treasuries to these unknown entities that had huge counterparty risks, they all rugged. Who's there standing at the end of the day, right? Cardano, dude.
Charles.
And Charles comes at the weirdest moments, dude. Dude, he came out
I
back
was
in
gonna
May.
say,
He
hey,
came
man,
out back
my
in
ranch
June.
is safe. My ranch is safe from the yields.
Come to the farm, dude.
Jesus.
He told Sam to come to the farm, dude. He told Sam to come to the farm so we can discuss business, dude. And what did Sam say? I'm not sure that you guys have anything worth talking about. Look at Solana. Look at Serum. I'm sorry, not Solana. Serum. I believe that's Sam's product. I believe it's
Yeah,
Serum. And
he
something
funded most of it.
and something else that is like complete garbage. I think there was like one derivatives product that he built that literally liquidated everybody last September during the
Mango.
run. No, not that one. It's a derivatives that literally had a candle to 6K on wrapped BTC on Sol, which is like the most like unprofessional thing to do, to build something out like that and think it's good product market fit. So I'm not going to go anymore on a ramble about this.
The one thing I did want to leave you guys with is right now is a perfect time to start building infrastructure for yourself, whether that's having things where you track your wallet balances through Python or Excel. Start building your own portfolio dashboard. Start building your own tracking systems of these coins. Like right now is a perfect time to do it. It's not a great time to sit and watch price every second.
Yeah, man. Definitely watching price every second is not healthy at all. For this past vol event, CPI and FOMC, it was like the most left curve thing, and I was pretty transparent on Market Talk on the Twitter space that Carter had 2 days ago before the print, and many people were talking about longing BTC, and I came out and said, dude, I'm not even going to touch that. I'd rather just stick to Matic, which is a huge vol play anytime we have these events. And look at what Matic did. It put on a 5% yeet candle in like 30 minutes while everything just kind of like lagged behind it. So I think what we can take from this is that things that are going to solve climate change matter in crypto. Don't look at the price. Let's go. And don't fade Charles Hoskinson. And definitely create good conversation with Nicholas. I think that we've avoided any sort of further contagion effect into crypto now that because Bitcoin is forming relationships within the industry on an institutional basis. And I'm going to say it one more time. For those of you listening on Twitter Spaces, I put the Discord link up below. We have a community of over 800 members, and we have voice chats, and of course we have premium services like our Giga Chat membership, where we have pre-market voice streams and the first 30 minutes of the trading session, and we also have an exclusive voice channel. And on top of that, you can go ahead and go on the Because Bitcoin website and check out some news articles. And again, on the Because Bitcoin YouTube channel, go ahead and give us a like and comment and subscribe. Turn on bell notifications. We have a consistent stream. We have a consistent stream. Prestige. We have a consistent stream of content provided for you guys at 10 a.m. Eastern time. We have our boy Snorlax XBT and Premise. His handle is Profit Gained. They give a live stream uh, an hour after market open, and then at about 12 p.m. we have our boy Bando, our CEO Max, and also the guys from Breakfast News pop in. Then at 4:15, we have our big dog Brandon Ukraine with Market Talk, and then anytime from 7 p.m. Eastern time and onwards, you have myself presenting you guys Crypto World Radio. Sometimes we'll have earlier shows like we did today. Sometimes, we'll actually stick to a consistent schedule like 7 p.m. Eastern time. And sometimes, we do have special guests, whether it be projects or devs, they tend to be later in the day. I want to make an announcement again for you all here on Twitter Spaces, or if you're listening to the replay up on YouTube. Uh, um, we have our special guest tomorrow at 10 p.m. Eastern Time, Neutron, who is building the Cosmos DeFi Hub, and I'm really nervous for that. Get to talk to a pretty cool project. I've never done that before, and hopefully I don't choke. I'll make sure to eat a good breakfast, and without further ado. For breakfast, I had a cereal pancakes with strawberries and blueberries and a protein shake. Um, Feel Pain, what did you have for breakfast? I guess we'll do a round table. What did you have for breakfast?
I had some sausage biscuits. They were excellent. Yeah, I went down to this local breakfast place and got some biscuits, got some gravy, some biscuits and gravy, Southern
Yeehaw!
staple. Yeehaw, baby!
Vestige, what'd you
Texas
have?
way.
Vestige, what'd you have for breakfast?
Bro, I had a solid breakfast fucking sandwich. It's fucking great. A little bit of
That's what's
egg
up.
and shit on there, It was fire. A little bit of a smoothie too, to wash it all down. And then
So I was gonna say I was waiting for the smoothie, bro. Prestige
yeah,
never starts his day without a
solid
smoothie.
coffee and a croissant to kill the rest of it off, and we're good.
Nicholas, what'd you have for breakfast, brother?
I had just a smoothie, so I'm on Vestige's game.
Bashar, what'd you have for breakfast?
Ass of some black coffee.
Serious mode. Serious mode, dude.
Playing no games.
Sockner, what did you have for breakfast, dude?
Black coffee and Red Bull.
Yeet. Brett B, what'd you have for breakfast, brother?
Jesus, I don't even know. I think I was just like pulling rotisserie chicken and some eggs. I don't even know what's good. I don't. I'm just so gross in the morning with what I eat. I had like a bite of my son's waffle, and then I pulled some chicken out of the fridge. I shouldn't be talking about what I ate for breakfast. It's gross.
Nicholas, round us off.
I haven't eat today.
I think he's on the other side of the world, man. Well, I think that about wraps it up. Thank you guys. Thank you all for popping in. Thank you, our boy Nicholas, dropping straight nukes of alpha. Thank you for that, man. You were a great guest. You were a great guest, man. I thank you for your time that you've taken out. You were like a tank. You were like a Russian tank, and you approached us softly and you backed off from Ukraine. So I thank you for that, man. Thank you for being awesome. Thank you for your knowledge. Um, Thank you for being so kind, man. Thank you, thank you, thank you. Our boy Payne, always showing the love and support, coming up here pretty much every single episode. My dog, my ride or die, and that's what I'm talking about. I don't make the rules, I just follow them. Same thing with our boy
Of course,
Vestige.
man.
Same thing with our boy Vestige. Thank you, man. I appreciate you. Thank you.
Make this a hard Call of Duty addiction as of late, but don't worry, I'll be back. I'll be back.
It's okay, man. It's all right, bro. We all want to play as Ghost. I'm feeling the same thing with Sonic Generations. Uh, Thank you, Bashara, for coming up, man. Thank you, Nicholas. Thank you, everyone, for coming up. My name is King Wabi. Thank you for supporting Because Bitcoin and Crypto World DeFi. I'll see you tomorrow at 10 p.m. Eastern Time if you're going to be a Spaces participant. And, for people listening on YouTube on a replay months or years from now, you can catch episode 5. And our guest is going to be Neutron, which is the DeFi hub built on Cosmos. Thank you, everybody. Good night, good afternoon, good morning. Thank you all. I love you. God bless you. Sleep well wherever you are. I wish I can, give you a high five NFT or something like that. Maybe a hamburger, maybe a milkshake. Hopefully, you sleep well and have an amazing breakfast. I love you. Okay. That's
Appreciate it, Wabi.
Appreciate you, Nick.
Appreciate it, Wabi.
I'll see you guys
You're the
on the
man.
next one. Peace
See you
out.
tomorrow, brother.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times. When I buy this, I'm going to get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly follow the current. You take all emotions out of it. You say, I'm going to trust the statisticians. You would have bought Dow Jones somewhere down here under 30,000. Depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.